Michael Hsu, the acting chief of the Office of the Comptroller of Currency, a key U.S. banking agency, saying the cryptocurrency industry has an unhealthy dependency on hype, and he thinks it's only getting worse. Speaking at the Washington, D.C. Blockchain Summit, Hsu said the recent fiery collapse of Terra USD, also known as UST, and the wider drama that came with it should serve as a wake-up call to the industry, which he argued has grown too fast. Joining us now to discuss is Michael Hsu himself. He's the acting chief of the Office of the Comptroller of the Currency. Welcome, Comptroller Hsu.
Thanks for having me.
Great to have you here. All right, so Luna and UST, the Terra ecosystem has caught your attention, of course. What action, if any, can be taken by regulators, or is it up to Congress?
Well, it depends on what space you're talking about. Each of the agencies has different jurisdictions over different things. The OCC, we oversee banks, national banks, about 1,100 banks, about $15 trillion of assets. So that's our remit. The SEC oversees securities, the CFTC oversees commodities. So it depends on which agency. And of course, Congress has been talking a lot recently about stablecoins. And I think that that's an area that's got a lot of engagement, a lot of interest. And our interest is making sure that stablecoins are in fact stable, which is not always the case, as recent events have shown.
Right. Well, the SEC was investigating Do Kwon of Terraform Labs and the creator of Terra Luna and UST, but they were investigating Do Kwon for Mirror Protocol, which involves synthetic stocks, ETFs. But did they drop the ball here? Was the problem all along that they should have been looking at algorithmic stablecoin like UST?
So I'm not going to speak about an SEC investigation. I'm not familiar with that. In terms of, I think what's interesting, if you kind of rewind the tape, UST, Terra USD, was not that big that long ago. Back in, I think last fall, November, it was about 2 billion, 3 billion. And it grew very, very rapidly to become the third largest stablecoin in the system. And how did it grow? It offered 20% yield if you took that stablecoin and deposited on the Anchor protocol. And I think that just is reflective of a very yield-driven, hype-driven economy. That's how you get big. And it could continue. That was part of the plan, is that you could offer those yields by continuing to grow. And I think there are a lot of folks now who are decomposing, deconstructing what happened. And a lot of people are saying, oh, it's obvious. It was weak from the get-go. They weren't saying that back then. And I think this is something that has to be looked at. Now, to me, as someone who's been kind of engaged in a lot of these stablecoin discussions, the fact that the Terra collapse then spread to Tether is very interesting and notable, because they're very different kinds of stablecoins. An algorithmic stablecoin, Tether is not an algorithmic stablecoin. It's asset-backed. And there should be no reason for contagion, and yet there was. And I think for folks that, like myself, who've been through banking crises before, financial crises, who have studied this is very familiar. We know this. And so, and part of the solution is prudential regulation can offer some solutions. So
on that, here's a question that has been very difficult for anyone to really answer. No one has really answered it adequately, although our guest this morning did give a good shot. But how would you regulate algorithmic stablecoins?
I don't think you would. I think the way to approach this is to define stablecoins in a way where they are in fact stable, and that way people who are using it know that it's stable. They don't have to worry about how exactly it's stable. That's determined by the regulation. And then we move on with life. And I think this idea that we're going to have lots and lots of different things that call themselves stable coins, and some may be stable and some may, that's a very dangerous place to be. And I think that's where we are right now.
Mm-hmm. And it's interesting, you mentioned that, we had this collapse of Terra Luna and UST, but somehow that had an effect on collateralized stablecoins like Tether, which are completely different from algorithmic stablecoins. Mm-hmm. And I'm wondering if further, you differentiate between, Bitcoin, or do you view crypto under all a similar lens?
So cryptos they're very different. I think each cryptocurrency is very, very different. Our focus has been on stable coins because stable coins support the broader crypto economy. with regards to one thing I would note with regards to Bitcoin and other cryptocurrencies like that, there was contagion from Terra to the broader crypto ecosystem. I think pretty much all cryptocurrencies sold off pretty violently in the aftermath of the Terra collapse. And I think one stat I saw, a couple hundred billion, up to $500 billion of market cap was lost. And if you unpack that, part of that is just a sentiment of risk off. Part of it is that trading ecosystem, a lot of these are connected, they're interconnected in different ways, through DeFi protocols, through other platforms. And I think that realization of, oh, wow, there's contagion risk here in the crypto space due to trading is it's a bit of a wake-up call. I think folks have been assuming that a lot of these projects are separate, they're different, they have their own dynamics, and they don't. I think that they're quite related.
Do you think that contagion risk could filter out to the traditional markets or the U.S. economy?
So it always could. And I think what's interesting in this case is that it didn't. So you had a massive loss of value in a big system, and the traditional banking system just motored right on. There was no stress at any banks. There's no rumors of any stress at any banks. And that's because I think a lot of banks did the right thing in taking good risk management actions and not getting exposed to crypto. And the regulators like the OCC, the FDIC have put out reminders to banks that if you're going to do crypto, it's got to be safe, sound, and fair. And you have to prove that to us. And I think that's enabled the banking system to be fairly insulated from that volatility so that they can serve as a source of strength to the real economy.
Mm-hmm. That kind of relates to my next question, which is, what is the impact to the U.S. banking system, if any, of Bitcoin or other countries adopting Bitcoin as legal tender, like we see in El Salvador and more recently the Central African Republic?
So that is there's some at a really high level. The impacts are not that much currently. I think that there are some, for banks that are involved in those countries, that are banking in those countries, there's clearly a lot of questions that they have to go through about legal tender, what's legal in the country versus what's safe and sound as a bank. And so, but there's not that many banks that have to grapple with those kind of detailed technical questions.
Mm-hmm. Recently, JP Morgan has said they're actually quite bullish on Bitcoin. They think that it'll rebound 30%, and they're considering cryptocurrencies as a top alternative asset for them. Do you welcome this, or do you find it concerning?
I don't have a view. I don't have a view on the prices of cryptocurrencies or forecasts or things like that. I would note that to my knowledge, there's no valuation model for a cryptocurrency. With stocks, with bonds, with derivatives, there are methods and approaches to valuing them. People have differences of opinion about those valuations, but I think with crypto, the valuations have been largely driven by hype, and so I think that's something I was trying to point out is that leads to kind of boom and busts, that leads to consumer harm, and I think it crowds out productive innovation when it's kind of so hype driven.
Mm-hmm. Well, I mean, some folks would say that in a bear market, that necessarily weeds out the projects that just don't work. But then again, we see that Terra Luna has not worked, and they've already have decided to fork into a version 2 of the project. Right. Just quickly, what do you think of that? It's quite remarkable. We've before said we've said on one of our shows, it's kind of like if Lehman Brothers just collapsed and they said, oh, by the way, the next day, we've raised money and we're on to a new project. What do you think?
I think this, without speaking to that specifically, excuse me, I think this forking is something that a lot of investors and kind of participants in the space don't fully appreciate, because they're not the first ones to fork. If you go back to Ethereum, after the DAO hack, there was a fork there. And I think it is interesting to think through, like, what exactly does a fork mean? What does that mean? How should that be interpreted? What are the kind of real life analogs to that? And I don't think there are any. And I think that just kind of reflects, again, some of the different unique differences in potential vulnerabilities in the crypto space that need to be worked out if it's going to grow and be a more sustained, long-term, both asset class and a platform for other economic activity.
Mm-hmm. And when I mentioned JP Morgan, I guess where I was going with that question is, I mean, we're seeing banks seem more receptive to interacting with Bitcoin, other cryptocurrencies more and more. Are you comfortable with that? Seems to be where the future's headed.
So our focus, again and again, is always going to be safety and soundness and fairness. So if crypto or any other activity, if it can be done in a safe, sound, and fair way, we're open to it. I think in the crypto industry, particularly with the crypto, in the crypto space, there are a lot of questions. There are a lot of questions about its soundness. And I think the recent events have shown that there's some deep kind of what I would call as deeper vulnerabilities. It's fragmented, so it's very prone to hacks, right? You've seen that there's contagion risk. And you've seen that with custody and ownership, there's questions even there, which seems rather fundamental to something. To still have outstanding questions there, I think really raises some questions about kind of the safety and soundness of that particular activity.
Mm-hmm. And I guess my last question I want to touch on was the OCC granted Anchorage Digital, a crypto native company, an OCC trust charter last year, and it became the first national digital asset bank in the United States under the previous chair of the OCC, Brian Brooks. Now, in April, the OCC found Anchorage failed to maintain proper AML rules and required the company to appoint a compliance company. I'm just wondering, is there any update on that? Are they in danger of losing their OCC trust charter?
So I'm not going to speak about specific cases. What I will say is any bank that gets chartered by the OCC is going to be held to the same high standards, no matter what they do or how they are operating. Like rules are rules, standards are standards, and we apply those equally to everybody. So that's the really important thing to bear in mind. With Anchorage specifically, we provided a conditional approval for that charter, and so we follow our process. There's a process to conditionally approving a charter and then to finally approving it. And so in all cases, we have really clear standards and rules, and we just follow those. And that's as much as I'll say about that.
Okay. Wait, and just one last question. You mentioned at the blockchain summit in DC that the crypto markets seem to be ruled by hype and it's growing too fast, dangerous for consumers. So what, if anything, can the OCC do about it?
Well, I think we talk about it. It's part of coming on your show, me giving the speech. I think me personally, so I have lots of discussions with bankers, again, kind of hammering the safe, sound, and fair mantra. I talk to other participants. I talk to my peers at other agencies, at the Treasury Department, to make sure that, are we on the same page? I talk to Congress. They have a lot of questions about what is this stuff? How should we think about it? And I want to make sure that everyone has the right information to make informed decisions, and we try to act in as coordinated a manner as possible as U.S. government.